Well, morning traders. We've got fairly subdued conditions in terms of implied volatility in these markets, but there's plenty to focus on. We've got an RBA meeting, a Bank of Canada meeting. For those who like it a bit spicy, a central bank meeting in Chile. We've got a few bits and pieces going on the US, but I definitely think we keep our eyes on Europe this week with 13 different ECB speakers and the market really paring back rate expectations in Europe. And we've got really a weakening euro playing through. So plenty to focus on despite this weakening volatility playing through. Let's check out what's on the data docket this week. Good morning traders and welcome to the new trading week ahead. We do have a fairly quiet week in terms of event risk relative to where we've been. And I think we're seeing that in the volatility markets. You can go into FXG10 in 1 week implied volatility and see it's fairly subdued levels. Really, most FX pairs are below the 15th percentile of the 12-month range. It's really the Aussie dollar which is showing any kind of expected movement. Now, I know FX markets have been realising at pretty low levels, but you know the market is speaking out. They're not expecting big range expansion playing throughout this week. Aussie CAD's really the only thing that's showing any kind of real life at the 32nd percentile. Going to equity volatility, and of course, you know, there's a lot of focus on what's happening in the VIX index, which closed at 13.09% on Friday. It's the lowest weekly close since 2019. And in treasuries, you can see on the MOVE index that's been, you know, coming under big pressure, and people have been sellers of rates vol as well. And you can see that with the market there closing at the lowest level since February of this year. Now, looking forward, I think the big themes that we've been seeing have been a softening US labour market. We've been seeing this consistent drip of fiscal stimulus headlines coming out of China, and we expect more this week as well. And in Europe, I think that plays a key centre because we've seen the Euro area core CPI numbers coming out below expectations and certainly not what was implied by country level CPI numbers. And also we've seen a number of the hawks coming to a much more balanced view. We saw that with Schnabel playing through. And if you have a look at European rates for rate expectations on the rates board, you can see that we've dropped to about 6 basis points of tights for the 14th of September meeting next week. That's a 25% chance that we get a rate hike playing through. So on balance, the market said that we're probably going to see enough evidence there for the ECB to sit on their hands. Now, through this week, we do get 12 or 13 different ECB speakers playing through, including Schnabel, Christine Lagarde, and also Holzmann as well. So I think those rate expectations could be thrown around. But at the moment, if you see from rates expectations, we've got 6 basis points being priced in and also terminal being priced at 380, which gives us about 15 basis points of tights, really, till we get to that peak pricing. Now, I know a lot of people are looking at European spreads relative to US Treasuries. But, you know, I think if you look at price action in euro dollar at the moment, we've broken through that March uptrend. We've got our eyes on that recent swing low of 107.65. So something we are watching very, very closely indeed. Out throughout this week, we do get a range of central banks, the Reserve Bank, the Bank of Canada, and also the Chilean central bank are going to be closely watched by those people who follow emerging markets quite closely. In Australia, as we can see from the rates market here, we've got absolutely nothing being priced for the RBA meeting. The market is not expecting the Reserve Bank to hike in any capacity. A very balanced statement playing through. Again, very much a data-dependent central bank. Yeah, you'd be very, very surprised if those raised rates. You'd fall off your chair kind of moment. And actually, if you look further out the curve, we can see 9 basis points of total hikes being priced in by March next year. So that's probably where you're going to get the conjecture on the moment is how that statement marries up to terminal pricing further out the curve. I expect a momentary blip in Aussie dollar volatility before we see it settle down, and then again following very closely to what we're seeing in Chinese markets playing through. The Bank of Canada meeting, very little is being priced in there as well. We're expecting an extended pause to play through. And as I say, in the Chilean central bank there, we've seen headline inflation coming under big pressure. We've seen fairly subdued growth. The debate there is whether the central bank there looked to cut by 75 basis points or again by 100 basis points playing through. In terms of the US, you can see rates pricing here. We've got very little being priced in for the next FOMC meeting, just a 6% chance being implied. And we can go up to terminal pricing for the November meeting, where we're implying about 10 basis points of total hikes being priced in for that meeting as well. So a lot of water to flow into that bridge until November. And if you look at the data, as I say, it has been coming in a little bit softer of late. Now, what have we got this week? We've got a few Fed speakers to play through. We're not expecting any major insights from them. We've got durable goods factory orders, we've got unit labour costs, we've got the weekly jobless claims. I think probably the highlight of the week will be the ISM services number, which is expected to come in at 52.5. The market picks and chooses whether it wants to play around with that one and react to it. We'll have to see. I think we only get the big movement if we get that number below 50 playing through. I think China's going to get continued focus this week. We get trade data playing through. Again, very, very difficult to forecast that one. But, you know, your markets are currently expecting exports to drop 9.8% and imports to drop 9% as well. So, again, yeah, that's been a big weakening part. You know, there is going to be some improvement expected. But, you know, those numbers are still hardly inspiring. And we also get the CPI numbers coming out later in the week, into the weekend, where we could see some gapping risk playing through. In terms of UK rates, you can see after Hugh Pill's speech and what we've been seeing there with the data flow, we've got 22 basis points of tights neck price for the 21st meeting there. And we got terminal priced at 567, which gives us about 50 basis points of tights being played through. Sterling got our eyes down at 125.47 on the daily. You can see, you know, that potentially could be a big level to watch through. We do expect some further downside risks in the pound this week as we play through. But in terms of this week, yeah, fairly quiet conditions to play through. Obviously, that has big implications for your position sizing and your risk. We've talked about what's happening on the data docket. Trader with Pepperstone.